Okay, welcome back, guys. I'm going to get right into the charts, show you guys what's going on, and what I think is going to happen in the future. Again, we just use technical analysis. So again, I'm not using the, kind of a blind mantra of the Fed's going to whatever. I just look at the charts. I tell you what the charts are telling, what my read on the charts are, using technical analysis, divergences, to find out where direction's potentially going to go. And then it's just about managing the trade, managing risk. So we'll start out. Leave me a thumbs up, though. I do appreciate that. And then if at the end, if you're interested in learning about how to use the charts to do your own technical analysis, find your own trade ideas, take my course. I priced it at $99. That's really cheap, really fair. But there's a lot of value there, I think, especially for that $99 price point. Link in the description below. If you've taken the course, leave a comment on, some feedback on the course. Maybe there's some things I can add to it. All right, getting into the triple Qs. So basically, I'm looking for a break at this 314 level. That's kind of the near-term support. You can see that was the reaction point right here on this hourly chart. We held the support there, and then we've broken down, came right down to that first level of support, bounced off of that. That's expected when you first fall into a level of support to get a reaction. Okay, that makes sense. We bounced off of that. And now we're, continuing to roll over pretty impulsively too. So I think we're going to break 314. Again, this is just increasing now the probability that we're heading down to 300. Because we're going to be down here at 314 today. Maybe they'll hold it here today and gap down tomorrow. That's possible. But, regardless, I think we're going to break it now that we're tagging it again and heading down to 300. So in this chart, again, we've broken down. There's a sell signal. I talked about the sell signal a while ago, but here's your bearish rising wedge. See the green wedge I got marked out? And if I go to the daily, that wedge was accompanied with bearish divergence. See the divergence, how that we're just sloping down, trending down, making lower highs and lower lows basically in the momentum indicators, PPO and RSI. So that was signaling a trend change was likely, and then you look for the break of trend. So there's your break of trend or your sell signal. You get the gap down, boom, sell signal right there. Come down to the first level of support, get a bounce, and then continue the trend. A lot of people had commented recently that was it. That's the end of the sell-off. I just continue to continue to read what the charts are telling me, and the charts never told me that was the end of the sell-off. There was no capitulation volume. There was no change, bullish divergence. There was literally nothing. There was just a bounce off support as we continue to downtrend. And I talked about that in a video that we're now going to follow the slope of hope. And so downtrends typically follow the slope of hope, which means, especially, after a real long extended bullish trend, that's a really long extended bullish trend. People don't know when it's over, and they don't want it to be over. They made such good money or such easy money, and they feel like that's never going to end. So they follow the slope of hope. And so what happens is you get the break of trend, and you get these little bounces, and these bounces keep the longs in the trade, because the ones that were caught on this breakdown, they want their money back, or they want to get back, they want some of that money back. So the bounce basically keeps them hopeful that they are going to get their money back and go on to make more money. But then it goes the other way. So they'll start to realize that, the trend has changed. They'll start selling their positions, scrambling to take their profit, and that's what fuels the next leg down in the market. So that's the slope of hope, and so now 300, that's what I'm looking for. SPY. Oh, and 300 on the Qs is really this level of support right here. You can see back here on the daily chart, hit it as resistance, broke above it here, held it as support there, and then we were off to the races. Now you can see we're pretty much pointed straight down to it. So I think we're heading right down to 300. We might get there today. I don't know. That's pretty far. But it's possible. We'll likely get a bounce there, some sort of reaction. But again, we'll have to see how this thing sells off, because if this gets, if this starts to accelerate, we could be going a lot lower than 300. We could be heading down to 280, about 282. That would be the top end of this price channel here on Qs. This is going all the way back to 2009. So you can see nice, clean, upward price channel. This is the bull market trend, the bigger trend for Qs. And the top end of that range is right down there at like 285 or whenever we actually hit it. So if we get down to that range, I think we're breaking it, and I think we're heading down to the bottom of the range. Down there, we'll have to see. And so again, that's just kind of longer term. It's going to take time. We're going to follow the slope of hope. So we will have bounces along the way. We'll fall, we'll bounce, we'll fall, we'll bounce. That's how it works. Moving on to the SPY. SPY is, SPY hasn't had as much selling, and I thought that because SPY hadn't had as much selling, that was an opportunity potentially in the VIX, because the financials were holding up and the SPY just wasn't really selling off. Now today, pretty good move down today, down 2%. You can see we're basically, if I go to the hourly chart, we're downtrending. We're, even this new high was slightly lower than the previous high right here. So lower highs and we're making lower lows. So we're downtrending clearly. And, that'll start to become obvious to more and more people as they scramble to get out. And that will continue to fuel the downward move. SPY is, selling off, and you can see like UVXY is spiking today, up 14, 15%. We're spiking. And I circled this whole area as a divergent low, potential area to build a short position. Or sorry, not a short, a long position. You can see here, bullish divergence. See how the momentum right here, I have it circled, was a higher low than the previous low. We're trending up on the PPO and the RSI, while price was making a new lower low. That's a divergent low. Again, I talk about this. I'll teach you this in my course. I try to make it very clear in the course. So check that out. And we are bouncing off of, we're moving higher, basically. We're impulsively moving higher. So looks good to me. Looks like volatility is going to increase as the market continues to fall. Let's look at IWM. So IWM is right at support right now. This line right here, it's about 220. We fell right down to it, and that's support. We'll probably hold here today, I would think. And then, gap down, I guess. If the market continues selling off, IWM's not going to, it'll break too. So likely, we got to watch those other markets, but I think likely IWM is going to gap down if those markets continue to sell off. There's some support. You can just mark it out, some support right there at about 205.45, and then another level of support, more major support down here at 193.13. Also, you can see this uptrend line here in IWM is down there. So yeah, I could see us falling straight down to that area, about 193. That should be a lot more major support, likely to get buyers down there. Okay, in the bond market, I've pointed this out for a couple weeks now that it looked like the bond market was going to start to cause some issues. And I had this blue line. I think, basically I said if we go much lower beyond this blue line, we're going to start to see problems in the market. And that's playing out exactly as expected. The thing is that TLT, so this is the bonds. As bonds moved lower, the yields or the interest rates move higher. That's how that works. So the bonds continue to sell off, and interest rates are spiking 1.5%. And that is not good for a market that's loaded with a bunch of debt, corporate debt, all kinds of debt, just debt all over the place. So I would expect the Fed's going to step in here. They're going to likely step in soon and not let this get too far out of control and announce some sort of bond. They're going to call it like a twist or something like that, where they'll sell the short end of the curve and buy the long end of the curve. Or maybe they'll just outright buy the long end of the curve, which would start to drop interest rates. But I suspect the Fed is going to do something. So look for that headline. Gold's likely to rally on that headline. Let's look at gold. All right, so gold here, gold still looks good. It's constructive. Yeah, we're selling off $30 today. But again, it's not going anywhere. You can see we're just kind of popping below the recent lows. This circled area is the divergent low area, so the area to potentially buy gold to go long. And you can see we have bullish divergence. That remains intact on the RSI and the PPO. So just these new lows are just divergent lows. Doesn't mean they're going to play out for a trend reversal, but it is objective here to buy gold. And I think we can go all the way down to 1750, or, we potentially could get down. I don't think we should get down to 1700, but I think down to 1730, maybe spike below this trend line a little bit. I don't think we'll do it anytime soon, though. We're probably going to just continue to muddle around in this area, and then we'll just make kind of spike lower and then recover. So I don't think we're going much lower in gold. This does look like a good area to buy, and I've been doing that. I've been building gold mining positions. Okay, so watch these financials. If these break, and they're kind of starting to break this trend right here, if the financials break, there's going to be a lot more downside in the market, because the tech has been selling off and financials have been strong. But if financials break, if you got tech and financials selling off, the market's, you're going to have a broad-based sell-off. Let's just put it that way. And so, watch the financials. Right now, the level I have is just on the hourly chart. I've got this trend line. This is the trend line we've been walking up. We're coming right down to it. So we're at support. So now we look for a sign that that's going to break. As of right now, it hasn't broke. So, so this is support. So it should hold. But if it breaks, then you'll see a lot more selling in the market. Amazon, I just want to point this out. So I've got these head and shoulder markings up here. This is a complex head and shoulder. So you have a left shoulder, a head, and then a series of right shoulders. That's a complex head and shoulders pattern. It's a big pattern. This has been going since July of 2020. So almost, I don't know the exact, almost a year basically, not quite 9 months or so of just topping what looks like a topping pattern. And if we're going to come down to this neckline, we're at it looks like, if I go to the daily here, yeah. So Amazon's at the 200-day now. So we're probably going to get, we'll probably get a bounce here or hold up at this 200-day. But if Amazon breaks the 200-day and heads down to this neckline, well, first off, a break of the 200-day is bearish. Just the algos flip sometimes when you get that. But then you head down to this neckline, which I think is about 2,930. If we break this neckline impulsively, then likely Amazon just made a top in the market. Next level of major support, you can see all the way from the 2009 low or 2008 lows on this one. We've hit this trend line 3 times, so we would come down and tag that. It's moving around on me, but it's down here at like 2384. That's down a ways. So, and then we'll see. This trade here, tan. So I'm just looking for a break of this support level, which is about 97.63. We're on that level, right about here. We're really close to it. We break, I think we're heading down to 78.45. This whole trade has been outlined. I've talked about this thing for months now, but basically uptrend line here. We then put in bearish divergence right here at the top. So divergent highs. These are divergent highs. Signaling a trend change is likely. You wait for a break of trend line support, which is right there. We broke. There's a sell signal where, gap down and sold off. That's a clean sell signal. Hit your first level of support, get a bounce, and continue the downtrend. So likely we are going lower, down to 78.30, and then potentially down to 57.73. Redfin. So I talked about Redfin. I'm not in this trade. I just didn't take it. But this is the level I said I would be waiting for a break of. Oh, let me change my tool here. Right there at it's about 82.60. That was you can see here that was resistance all through here. We broke above, and so I was waiting for a break of that support, and we held support right there. So that's the level I would want to see go before taking a short trade. Now, I wouldn't want to be long this. I would want to look for a short trade because negative divergence. See the big negative divergence on this? Signaling that this was just a divergent high that was likely to fail right up in here. And sure enough, has failed. We have broken support. So at this point, I would say Redfin's heading down to this lower trend line, down around 61. Depends on when we get there. We held support there for a while, broke, recovered. So that's the level that I think we'll likely head down to, and potentially a lot lower, but for now, I'll just say that level. Etsy, I've talked about this one for a while. Here's the uptrend line right there. We broke. Negative divergence. See the bearish divergence, how it's just trending down, and it does that when price is still going up. That gives you a it's a forward-looking indicator that tells you, okay, likely we're going to get a reverse in trend. And so these are divergent highs. Look for a break of trend line support. There's your trend line right there. So we broke. There's your sell signal right there. And you can see, from the sell signal to where we're at now, let's say you just took it maybe at the halfway point, or, let's just say you waited till the daily close just to be very conservative. You would have got in right there, and you're profitable by about 6% as of right now. And it's continuing to the downside. So I think we're heading down to this level, 170. We'll likely get a reaction down there. Actually, it's about 166, 166.25. That's the next level of support. We break that. We head down into this area gets a little messy. So I think Etsy might, this might be it for the move to the downside, somewhere down in this range. Top of the range is about 147. Bottom of the range is about 121. But again, if we're heading a lot lower, then, we're going to go a lot lower in these things as well. Peloton continuing to trend down, so nothing's changed. Someone asked me if I got out of my Peloton. Yeah, I took, what I did is, as we fell to this level of support right here, I took half my trade off. I took some profit, but I'm not, what I normally do is if we get a bounce into resistance, I'll add back that short position. As long as the technicals don't change and we don't get, some sort of a reversal signal or whatever. And then I let it continue to trend down. The trend is down. So you hit support, you bounce, but you're going to continue the major trend down. And so, yeah, Peloton's still going lower. I think it's heading down to this level, which is about $100. We're only $15, $16 off of that now. From the entry, here's the entry. I have it circled. This was your divergent high. And running right into resistance. From that entry, this thing's now down about 27%. So again, I point trades out when nobody sees that the next move is potentially down. And it doesn't always have to work out that way, but I try to point it out when it's objective to enter a short, and that's usually when it's objective to enter a short is when things look the most bullish. So everybody thinks it's bullish. Most of retail traders, they don't take trades based on what will happen potentially in the future. They take trades based on what's happening right now. So if something's bullish, they're bullish. When something's bearish, they're bearish. All right. So they're buying when things are going up. They're selling when things are going down. All right. And my style of trading is kind of the opposite. It's more contrarian, where I look for signals of trend reversals, and then I take that trade. Qualcomm continuing to trend down. We're likely going to gap fill down here at 129, 130. Zillow Group continuing to go down. So you can see, we've broken trendline support. We're at a little bit of support right here. It's about 157. We need to see that go. Next, once we break that, heading down to about 133. All right, so those are the next levels to watch on that. Neo's at support. It's about, it's right there at 48. So we're at support. Will we break it today? I don't know. But if we do, look for Neo to head down to 40. You break that. You break 40 in Neo, and you got this big vacuum pocket where I think we're heading straight down to 22.32. All right, Tesla. I had to take a quick break, but Tesla is, continuing to the downside. So again, all these trades that I've talked about for quite a while, they're all kind of starting to pan out and actually work. And so I don't see any change in the technical posture on Tesla. Tesla to me looks like it's heading down. We've got this level of support right here. It's about 656, 657. So I think we're heading down to that, and we already tagged it once. So a break of that sets us up for what looks to be a move down to about 542, 543, somewhere right in there, depending on when we get there. Potentially up to this 570 area. And that's all I see in Tesla right now. So I'm not going to go into too much detail on these gold miners, but I want to just point out nothing's really changed technically. I'm scanning through all these, and the ones that had bullish divergence still have that bullish divergence. So anyone that's making like a new low, here's an example. I'll just cover this one, Agnico Eagle AEM. You can see here on the RSI, still have bullish divergence. We're still making, higher lows. And today is no different. We're making a new slightly lower price, and the momentum is still bullish. It's still bullish divergence. So as long as that remains intact, I think all these little lows that the gold miners keep making are divergent lows, and we're likely going to reverse course. And so that's why I've been kind of starting to build a position in some of these. I've spoken about gold and the miners, and they look bullish to me. I mean, obviously they're not bullish yet because the price is still moving down, but they look like the area where you can start to build a position or add to a position, and then just wait for the trend to reverse. This divergence is telling me the trend is going to reverse, and we just got to wait now for the price action to show up. But by the time the price action starts to show up, you don't always have the best entry. So I just want to point that out. I'm continuing to like these. They don't look like there's any real damage done. And just going back to gold, you can see right here still have bullish divergence in the underlying metal in gold bullion. So GLD and gold, they still have that bullish divergence. That has not been changed. And so as long as the underlying metal looks bullish, the miners should continue to work out to the upside. That's all I got, guys. Thank you. I'll catch you guys on the next one.